Welcome to RANsquawk's EU morning briefing for Wednesday the 1st of July 2009. Just gone 8:30 now in London, so we're just going to take a quick look around the markets. Obviously at the moment equities are off to a firm start. We're up around 1.5% across the FTSE CAC and DAX, pretty much retracing that sharp downward fall we saw on that much lower than expected US consumer confidence reading yesterday. At the moment the equities chiefly being buoyed by some positive numbers in the manufacturing PMI numbers so far this morning. That started off over in the Asian session. We did see the Chinese number coming in at 53.2 against the previous month's 53.1. And so far this morning we've seen Ireland already coming in at a 9-month high, and also Spain coming in at its highest since May of 2008. The Swiss number has also just beat expectations, and we'll be looking out for Italy, France, Germany and the Eurozone heading into 9 o'clock. As well, helping to lift some of the commodities or equities is the commodity stocks. You've seen WTI crude futures just touch new session highs. We're up over $1 already. That's being lifted at the moment by expectations, obviously, with the pickup in manufacturing PMIs, but also we saw the API numbers released after market yesterday. We saw a 6.8 drawdown in the API crude number. That's a pretty big drawdown considering the 3.5 million build we had in the prior week, and obviously expectations now to the DOE numbers we'll see later on this afternoon in London. Just taking a quick look or recap on some of the headlines from overnight in Asia. We did see the all-important Tankan survey. It did come out at, in Q2, minus 48 versus expected minus 43, and previous at minus 58. So slight improvement on its previous, but not quite as much as some analysts were expecting. So a little disappointment in terms of the Tankan survey in Japan. Elsewhere, we did see dovish comments coming out of Fed's Yellen overnight. Yellen pointed out that US benchmark lending rates could stay near zero for a couple of years based on the amount of slack now in the economy. We did see USTs take a slight bid on those comments at the European Open. Yellen also said the recession in the US is likely to end in the latter part of 2009, but says that it's going to be frustratingly slow in terms of recovery and we will see high unemployment. She also pointed out that the Fed will use every bullet in its arsenal to boost the economy without much fear of kicking up inflation because of the huge output gap. Elsewhere, in terms of central bank speakers, ECB's Weber was covered in German press as saying that he doesn't expect the German economy to return to growth before mid-2010. Just taking a quick look then in specific stocks news. For Marks & Spencer's, eagerly awaited, they posted their numbers pre-market today. Better than expected, they saw their Q1 like-for-like sales in the UK down 1.4%. That was against a company's poll. They were expecting their sales to be down 1.8 to 3.5%. They've also said they're seeing an improving trend in their performance and said consumer confidence appears to be stabilising. That's given a bit of a boost to the UK retailers, likes of Next are also trading higher. M&S themselves are up around 3.5% just through 8:30 in London. Also Carrefour, the French retailer, they've also had various cost-cutting exercises that they've outlined, looking to cut costs by €4.5 billion by 2012. They're also trading higher. So taking a look then for the schedule, obviously we'll be looking after those PMIs taking us up to 9 o'clock. And then much of the focus today is going to be on the further jobs numbers heading into non-farm payrolls, which we'll see tomorrow. The ADP number, that will take the focus today. ADP is expected at minus 394,000, so analysts are expecting improvement as we saw in payrolls last month. And then ISM manufacturing, that'll be due at 3 o'clock London. Other than that, we'll be looking for reverse auctions today from both the Bank of England and the Fed this afternoon.